Hello and welcome to the day ahead. It is Friday, April 22nd. I'm Andrew Gagan. Well, to the action overnight, and once again, it's the outlook for central bank policy, which dominates with all eyes on FOMC Chair Jerome Powell.
We really are committed to using our tools to get 2% inflation back. And I think if you look at, for example, if you look at the last tightening cycle, which was a 2-year string of 25 basis point hikes from 2004 to 2006, inflation was a little over 3%. So inflation is much higher now, and our policy rate is still more accommodative than it was then. So it is appropriate, in my view, to be moving a little more quickly. And we make these decisions at the meeting, and we'll make them meeting by meeting. But I would say that 50 basis points will be on the table for the May meeting.
So the Fed chair all but cementing a 50 basis point hike from the US Central Bank at its May meeting. The comments sent bond yields higher and Wall Street lower, giving off its early gains as investors cheered positive corporate earnings and strong jobless data. Fed futures have now begun to price in bets of 3 straight 50 basis point hikes beginning next month. Unsurprisingly, tech, the worst of a bad bunch overnight as investors ditched high growth stocks in the face of higher interest rates. Netflix continuing its slump, taking its market capitalisation below $100 billion for the first time since January 2018 after a disappointing quarter report, which saw subscribers shrink for the first time in its history. The move prompted billionaire investor Bill Ackman to liquidate his fund's over $1 billion bet on the company, saying the future was too uncertain to hold the position. Meanwhile, Tesla shares bucking a broader trend after a bumper first quarter result after the bell yesterday. Twitter shares followed suit after Elon Musk confirmed he has secured $46.5 billion in financing as he considers a second tender offer for the company. Well, in fixed income, bond yields breached fresh multi-year peaks. The yields on the 2-year US Treasury, the most sensitive to interest rate changes, hitting their highest in 3 years before coming off slightly. Well, taking a look at the FX market, and the greenback recovering from a 1-week low on the back of those comments by Fed Chair Powell. The move takes the index up more than 2% this month alone, on pace for its best monthly gain since June 2021. The euro slid from a more than 1-week high after European Central Bank President Christine Lagarde said the ECB may need to cut its growth outlook further as the fallout from Russia's invasion of Ukraine weighs on households and businesses.
Certainly when we look at the risks, they're skewed to the downside for growth, so there might be more cuts to come, and to the upside for inflation. That's where we are.
Lagarde's comments were in contrast to those hawkish comments from ECB officials who seem to suggest rates will be risen sooner rather than later. And money markets are now pricing in a more than 20 basis point hike from the European Central Bank by July, with a near 80 point tightening by the end of the year, taking the benchmark above zero for the first time since 2013. Well, that all comes ahead of the key runoff in the French presidential election this Sunday, with incumbent Emmanuel Macron clearing a major hurdle, coming out on top in a TV debate against far-right candidate Marine Le Pen. In the crypto space, the spike in bond yields saw Bitcoin track equities lower to move back below 41,000 US, taking altcoins with it. Well, let's come back home. Any hopes the Australian share market may retest record highs have been dashed by that sharp reversal on Wall Street. It's pushed ASX futures down almost 0.9%. Oil prices moved higher again overnight as EU leaders discussed a total ban on Russian oil imports, while supply disruptions are affecting Libya due to blockades at its oil fields and export terminals. Brent crude up almost 1.5% to $108 a barrel. Iron ore futures were marginally lower at $153 a tonne. Base metals mostly mixed, nickel rising. And rising bond yields saw spot gold edge lower again to trade at close to $1,951 an ounce. And that is your day ahead. See you again Tuesday.